Good morning and welcome back to Trading Options Network. We've had a pretty fun weekend here with the 4th of July holiday and a lot of picnics and barbecues and everything. Hope you all had fun as well. But now it's back to reality. It is Monday morning. Market is open. No holidays this week, so let's go ahead and have some fun. But of course, first of all, we got to get our disclaimer out of the way. Everything we discuss is solely for educational purposes only and is not the opinion of Trading Options Network, so do with it what you will. And of course, be sure to like, follow, or subscribe on your favorite social media platform to stay up to date with everything. That being said, let's get into it. So, as of right now, the market's not really doing too much. The first couple hours of the trading day, it's barely moved at all. Pretty much flat, to be honest with you. If we go ahead and look at the 3-minute chart, as you can see, went up, went down, went back up. We did gap up a little bit, like 0.1% or something like that to start the day. But, nothing crazy, nothing out of the ordinary. So, today so far, pretty flat day. I wouldn't expect too much, especially with all the data and everything that's going to be coming out this week. I know Powell speaks. We have the CPI this week. We have the PPI this week. People are not going to be doing much today. So we should expect a pretty small candle. Because of that, I haven't really looked at any trades today. So this morning is going to be a relatively slower, a quicker video, quicker training, because we don't really have a lot to talk about. If we go ahead and pull up our current trades right now, we have, of course, T-Mobile, Roblox, and the semiconductor ETF, SOXX. Currently for the day, we are up $1,261. Again, we started with a $200,000 portfolio, so it's about 0.5%, so that's a great number, a little over 0.5%. I am okay with that. I will take that any day of the week. Think about it. If you made 0.5% every single day, you'd be doubling your money pretty quickly. So, we're good with this. We're good with this. Roblox is leading the charge today, up almost 2,000. So let's go ahead and take a look at that chart really quick so we can see what it looks like here. Roblox, let's go ahead and maximize that sell. All right, so we did gap up, and even though it is slightly red on the day, meaning it has come down from where it opened. The good thing is even though it did come down quite a bit, it hit 38.37 for the low today. It is obviously coming, going right back up quite nicely for us, so that's great. Just trading right under $39 a share, which, of course, if we go ahead and look at this, that is our short leg is $39. So that's exactly what we want to see. I mean, if we could finish this week moving literally sideways from here on out and finishing right about here, we will be pretty freaking close, about as close as you can get to a max gain. So that's exciting. We're exactly where we want to be. Of course, we will continue to monitor this. So if it does start dropping, we'll probably go ahead and close the trade. If it starts gapping up and moving up quickly, we'll also probably close the trade, because that will actually I'm sorry, we're not in a diagonal, we're in a vertical. So no, if it goes up over 39, we're just going to leave it as is, and as long as it wants to stay over 39, we're happy. So let it go up all it wants. We will be seeing max gain. I don't know why I was seeing it as a diagonal. I know with T-Mobile last week, we had the diagonal going. That was then converted to a vertical, but nonetheless, Roblox looking great. SOXX, we're down slightly today, 282, but we're still up 530 overall. I'm not sure. I'm looking at this. The 250 leg, the long legs, which are more of the insurance legs. Why we're down 282? If we look at the chart, I'm slightly confused at this one, and I'm trying to figure this out because we're up, over $3. So I'm not exactly sure why it's showing a loss. I mean, the 250 put, unless the only thing I could think of, which would actually make a little sense, is if for whatever reason The 250 put spiked on Friday, and it was valued higher than it should have been at the close, but because that happened, that was the reading we had. And since we opened on this morning with a gap up, it shows a larger loss. Technically speaking, there's no reason we should have a larger loss on that particular leg than we should in the 260 put, because the 260 put is going to have a higher delta, so we should have lost more value on that one, which is what we would want because that's our short leg. Okay, we want to lose value on the short legs. We don't want to lose value on our long legs. But again, overall, I'm not worried about this because this is moving very nicely for us. As long as we can continue to move and get closer to that 260, all of this value, again, look at this. We traded at $9. It's now worth $4.90. So that's a $4.10 move in our direction, okay, which is why we're up $1,620, okay, for that particular leg of this trade. The other one, it went from 380 to 1875, okay, so that is a loss of not quite $2. What is that? $1.92 roughly. $1.92.50. So, and then it just significantly dropped. That's interesting. See, this is the funny thing about options is that they will change substantially as things get filled throughout the day due to the bid-ask spreads either closing or widening. So that was funny how that just significantly dropped off the face of the earth for a second. But I'm not worried about that. It shows we're up $590, technically speaking. This 250 put will go to zero. This 260 put will go to zero if we do go ahead and get over that 260 level. That will give us a total profit of $5.20 times 4, which would be a profit of $2,000 and $2,020, I guess. So I'm liking where that's at. And I'm sorry, $2,080 if I did my math correctly off the top of my head. But, I'm not worried about that exactly right now. All I want to do is I would just want to see this continue moving up, and that's what it's doing. So we are good here. I'm happy with where we're at. If we go ahead and finish at 258.39, the great thing is we can actually do the math. So if we're at 258.39, if we finished here, we'll just call it 258.50 to make it easier. If we finish at 258.50, that would give the 260 put a value of $1.50, okay? Which would bring this to a loss, or I should say a decrease in value, not a loss, this would be a gain for us technically, but a decrease in value of $7.50. So if we take the $7.50, we subtract the $3.80 that our long legs were worth, that would give us $3.70 times 4. So that would give us $14.80. And then, of course, times 100, because as we all know, options contracts are worth, 100 times what their value is, what their premium is. So that would give us a profit of $1,480. Right now, we're at $500. So literally, if we just did nothing, if the SOXX semiconductor ETF did nothing for the rest of this week, we would still see an additional increase of, over $900. Okay, $940 to be exact. And that's if it literally does nothing. If it goes up, we will make more. If it comes back down a little bit, we'll lose a little bit of the value. It won't be a loss. We'll just lose a little bit of the value that we have in there right now. But again, I'm not worried about that. We have a great trade, so it's going our way. We'll keep it as is. T-Mobile, this is the one I'm going to be keeping an eye out a little bit more because we go ahead and look at this T-Mobile chart. Oops, I didn't mean to do that. Let's bring it back up here. If we go ahead and look at the T-Mobile chart, this one's looking like it wants to, maybe consolidate a little bit more. It's still above that 20, so I am definitely not going to just go ahead and abandon this trade yet. Keep in mind, we did go ahead and roll the short legs of this for a profit of over $1,000. So even though it's saying we are at a loss of $943, we are still up with T-Mobile on our trade when we opened it last Monday, about $500. Okay, So we're good here. It's just simply this particular position total that is open. Since we opened this one, the longer leg, the 177.50 call, we opened that last week on Monday. We opened this one on Friday because this was we rolled the short legs of this contract. So that's why it's showing this particular strategy at a loss of almost $1,000. But again, we're still up about $500 here. And the chart itself looks just fine. I'm not worried about it yet. Okay, I'm not going to, like I said, abandon it just because we're having a slight pullback here. Truth be told, when we opened, the chart was actually looking very, very strong. The stock itself was looking very strong. See, it gapped up. Go ahead and just pull this open a little bit more. All right, it took off strong, so there were definitely buyers there that wanted to buy in and jump in when the market opened for T-Mobile. That's a good sign. Yes, it has come back. You can say it's a little bit of profit taking, whatever. I'm not worried about what the reason is for this pulling back to this level. I mean, this was kind of what it was trading at pretty much all day on Friday. So that's fine for me. That's fine for me. Now, if it starts dropping a little bit more, let's go back and look at, actually we'll look at the 30-minute chart. Now, let's say it comes back down to this level down here around the 176 level, then yeah. In fact, I'd probably be out of it before then because our lower leg is the 177.50. Once we hit 177.50, which let's see is right here, roughly. There we go, 177.51. Obviously, that's close enough. So if we got down to this level, then yeah, I'm going to think about closing that trade. There's you can argue there's a little bit of support here. So maybe we do come down here and we bounce back up. But again, I'm not worried about it. I'm not worried about it at all. I like where we're at. The day chart, let's bring it back up really quick. There we go. Let me just make it a little bit wider here. There we go. All right, so again, I don't mind where this is at. These couple of big bars here, this pullback that it had is making the 20-day look like it's a little bit more bearish than it really is. Because if you take these 2 days out, this blue line is shooting straight up still. Okay, the 20-day moving average. So I'm not going to worry about that too much. Yeah, those 2 days were quite the dip here, quite the pullback. But look, it's just, it came back, it went up, quite a bit. It was outside of the upper Bollinger Band, so we should have expected a little bit of a pullback, or at the very worst, or I guess at the very best for the particular stock, a consolidation for a while. But again, it did pull back, and then it has been consolidating. So that 20-day is still looking good. The 50-day is moving up. I like this again. Now, if we start seeing it pull back and it's starting to test the 20-day moving average and maybe we're getting a little bit less confident, then yeah, we can talk about closing the particular trade. And if we go ahead and end up closing it, if we give back the $500 that we're up right now, then so be it. We still have these two trades right now up here that are still kicking butt for us. So not worried about this at all. Worst case scenario is we'll probably break even. Best case scenario, it does what I think it's going to do, and it's going to consolidate around this level, and our short legs will go ahead and expire worthless, which will give us the most amount of money. So again, if we just went ahead and went completely flat the rest of the week and closed T-Mobile where we're at right now, our short legs are worth $1.04 each, okay? And we have 23 of them. So if we go ahead and do $1.04 times 23, $1.04, and we'll even add that 0.5 times 23 times 100, that will give us another additional gain of $2,400. Okay. The long legs, let's see, it's 177.50. We are at 178.50, so they'd still be worth $1. Okay. So we would lose $1.40 there. Okay. I'm sorry, not $1.40. We would lose, what did I say, $1.50 or $1. So we'd lose $1.30. So if we go ahead and take that $1.30 loss times the 23, then times 100. Oop, how did I do wrong there? 23 times $1.30 times 100. All right, so that's $29.90. So again, we'd be looking at $600 loss. Well, right now it's showing $1,000 loss. We'd actually gain $400 more dollars. So again, we're not in a bad spot at all. We're not at a bad spot. That would give us a closing profit of $800 if the stock itself just stayed flat and stayed at the level we're at right now. We would close with about an $800 gain. So again, don't take what's happening in the one particular day as an end-all be-all. Take it at face value. It's nothing really. We want to see the theta go ahead and crush our short legs, and we don't mind if we lose a little bit on our long legs, because this is more of a theta play. It's a combination of theta and delta, of course, but we like the theta here. We like the fact that as the stock does nothing, or in this case goes, slightly down, heck, it even goes slightly up. I mean, again, this is the 180 call, and we're at 178.50, so we can go up $1.50 more, which would be the best case scenario, and it would still lose all of its value. So again, I like where T-Mobile's at. I did set an alert for it, by the way. Which will alert me when it drops at its break-even point. Okay, so if that were to happen, I'm going to get a text message. The way you do that, by the way, is you simply click on Setup, Application Settings. If you're curious, you click on Notifications. Alert is triggered. Yes, here's my email. But if I click on this, there we go. You can click on Send a Push Notification to Mobile Device. And of course, that means you have to add your cell phone number. I can't quite remember where I put that in. I know I did it somewhere, but I can't remember where I did that. We'll figure it out later, maybe. But nonetheless, if this does get to our break-even point, then I will get that text notification. So again, it's just a way to protect yourself. Overall, with these three trades, we are looking good. If we go ahead and take a look at the bear watch list and the bull watch list really quick. Here we have on the bear watch list VST. Let's go ahead and maximize this. All right, so definitely, oops, did not want to do that. Grab it, there we go. All right. So nothing's triggered yet. In fact, if anything, this is getting closer to taking it off of the bear watch list. I think we put it on when it was right here, but sure enough, it did go ahead and go up. So we'll probably go ahead and remove that one. In fact, I'm going to just remove it right now. I don't like it. ALB, okay. It's doing exactly what we would want to see from something that's on our bear watch list. It's having a nice little bounce after this massive drop. It is, right now, it is toying with that 20-day moving average. So the question is, how is it going to react to this 20-day? If it's going to go right through it, then our next step will be see how it reacts to the 50-day. But if it starts rejecting at the 20-day, then we can potentially look into opening up a position. It hasn't rejected yet, so we're not going to jump at anything quite yet. MP, it faked out over the 20, and now it looks like it wants to retrace. That will happen every now and then. So we didn't get our reverse off of the 20, but it's looking to be almost like a fake out. So also known as a bull trap, right? Some people will say, hey, we're crossing the 20. Let's go ahead. It may not be the bottom, but let's get into it now before it goes up and starts threatening with these all-time highs. And all these people start getting into it. And then, nope, we're just kidding. That's a bull trap or a fake out move to the upside. It can continue to retrace. It looks like today it opened, it wanted to move up, but now the bears are back into control, bringing it back down. So now if this comes down to the 20, if it breaks back below the 20, then we should expect to see it roll over and possibly go down to this $12 level again. So again, that is a good potential trade. Nothing yet that we're going to jump into. Tech looks like it gapped up a little bit, then went up more. I don't know what this is. Obviously, it wasn't earnings. Earnings is coming up later on the 24th of this month. But whatever it was, it definitely rejected nicely. Again, I don't necessarily like where this is at right now. Again, I'm not going to open up any trades. But if we drop below this 20 and start threatening breaking down below this level, then yes, we can absolutely open up a bear trade because there's not a lot of support. I mean, you can argue there's maybe some support around $44, $50, $45, but that's a $4 drop. That's a 10% drop. So definitely some potential there. And then McDonald's, McDonald's is down big. All right, so yeah, we could absolutely 100% look into opening up a trade here. You know what? Let's go ahead and do that. I kind of like this. We'll go ahead and open up a small trade. Target. Let's see. We dropped the low is 247.41. I think we could drop below that. Actually, let's go ahead and let's see the bigger picture here. All right, let's go to the year. There we go. All right, so we have some support down here at 245. So yeah, we can make that a target, 245. It does seem like there's a decent amount of support here though, where it's at right now. So I'll give this like maybe a 1.5 on my confidence level to break down. Down to 245, that's literally about a 1% drop. So I don't mind that at all. Let's go ahead and do that. Let's see. I'm just debating in my head what strategy I want to use. We could do a vertical. We could do a diagonal spread. Let's see here. Pardon me. I kind of like the idea of doing a vertical, but a very short vertical. So maybe the 1 week trade just for this week. So let's go ahead and go over to trade. We want to pull up the red. There's McDonald's. Close that one. Let's see what kind of value we have. We have the 250 put is at about 285. The 245 is about 90 cents. So that combined would give us, let's see, 90, 285, $1.95 on a $5 spread. It's not bad. That gives us, just to make it easy, about a $2 risk for a $3 potential gain. So I like that. I like that a lot, actually. So we're going to go ahead and we're going to buy a vertical. Okay. As it says here, we're buying the 250. We're going to sell the 245s. Again, I'm going to give this about a 1.5%. So at 200,000, I know right now technically we're over 200,000. We're going to stick with that $200,000 level times 0.015. That's a $3,000 trade. If we're at about $2 each, sorry, $200. Let's just go ahead and divide that by another 100. About 15 contracts. Okay, so we'll do 15 of these. So plus 0.15. We're at $2. If we can get $2, that'd be fantastic. If we can get this trade open for $2.02, let's see if we are able to confirm and get this. Let's go to monitor. All right, nothing yet. Oh, there it goes. $2.02. We have our 15 there. All right, so, oh, darn it. Oh, well. We're just going to have to monitor both now. That I hate how it does this. I wanted it to go on the margin account, but for whatever reason did the IRA. Silly paper trading. I don't know why it does that. It should just be one account. But nonetheless, we will go ahead and we'll just monitor this one separately. Hey, maybe I'll just use my IRA as bears and my margin as bulls. Who knows? But nonetheless, we have our bear open. We are going to monitor it. Click all accounts. There we go. Here's our McDonald's right there. And yeah, we'll see what happens throughout the day and throughout the week. So that's our one trade. Don't really have anything else for you because, again, the market itself has not been doing much, although the fact that McDonald's has dropped as much as it did on a day where the market itself is not doing much, in my opinion, is pretty bearish. Okay, so oops, keep forgetting every single graph. I have to change that to the hand. All right, so we'll see what happens with McDonald's moving forward. Let's actually really quickly go through our bull watch list. So we have Apple. I mean, Apple is on fire right now, so it's nothing I'm going to want to chase. It does look like it wanted to go down, but the bulls brought it right back up. So nothing, again, I'm going to chase. I would rather have it see a pullback or consolidation to the 20 and then make a decision. AMAT. I like where this one's going. If it can break this high here, which still has a couple bucks to go, then potentially open up a trade. But I'm not going to open up a trade now, just with the simple idea of trying to get there, because it could happen today and then drop down. So in this case, it's not necessarily that I want to chase it. I wouldn't be chasing it, in my opinion. I just don't like the fact that it's too close to that level right now. It would have been better to have gotten into it around here on this bar, but we didn't do that. So now we're just going to see what happens when it retests this resistance level, and if it breaks up, then we'll open up a trade, and if it breaks down, we'll want to see some more consolidation and then try and find a new entry point. Is this Colgate? Yeah, Colgate is looking decent again. We could have gotten into it on Friday. But same thing here. I like the fact that it bounced off of the 20. We could open up a trade to get back up to this $99 level. It's high. But it's not something I want to do right now. Coherent. Not really familiar with it. All right, Coherent definitely broke up. Let's see here. Let's actually look back a little bit longer. So this looks like we may be at all-time highs. Oh no, oh gosh. I don't know what happened back there. Wow. Well, I mean, it's so long ago at this point. What was that? New Year's of 2021? Or right before, right after? I don't know. So it's definitely been some time. And over here it was around 74. So it's literally done next to nothing. It's dropped down, actually dropped down substantially here. It's just we can't tell because of how much it moved on that drop. So let's go ahead and just get rid of that drop, and boom. All right, so this, I like this actually quite a bit. Let's actually go ahead and open up a trade. I like this a lot. Oop. I don't know why it does that. Oh well. I don't have a particular target because we haven't seen these levels in a long time. So see, we're up pretty big today. But this can just continue moving up and up and up. I'm going to do a small trade. I love the chart. I do. But we're going to do a slightly more risky position. So let's go ahead and open up green. Let's see. We're going to actually look. When I do straight calls and straight puts, I go a little bit further out. Let's look at the 39 days. 75 call puts us a little bit in the money. 70 call. Let's see. I like to look at the delta as well. There we go. I want to see at least around a 70 delta. So that would put us around the 70 strike. Okay. Unfortunately, there's nothing between 70 and 75, so we're going to be looking at the 70 strike because I want to be as close to 70 as possible. 0.7, I should say, for the delta. And now the question is, how many contracts are we going to open? So I'll give this one a 2 because I really like the chart. So 2% of 200, that'd be $4,000. So we're going to be looking at about 4 contracts here. So let's just buy a single. Go up to 4. 1030, mid's 1010. Okay, so let's see if we can get it at 1010. Confirm, send. Again, I'm doing it in the IRA. Maybe I can get this before, cancel it before it goes through. Cancel order. Let's get back over to the margin account. It's really annoying that it does that. Trade. All right, so let's go ahead and try that again. Buy, single, 4. Mid's now at 1020. All right, nothing yet. Still working. And yes, you can sit here and wait a little longer, but this is one of those where if we just let it sit, it can continue to move up. And oh, there it goes. If it continues to go up, we may never get into it. So this is one of those trades where I want to get into it right away. So if I have to pay an extra 5 cents, then I'll do that. But there we go. We now have the COHR there as well. So, all right, we just opened up both a bear and a bull position. Now the COHR, I'm definitely going to be watching closely because we don't want to lose $4,000. We absolutely do not want to lose $4,000. Even though that is a 2% position based on our total assets, that does not mean we're okay losing it all, of course. So let's go ahead and look at this chart here. And I want to set up an alert for myself. So to do that, I'm going to set up an alert. If it drops below, I'm going to say right here, which is the $74 level. Perfect. It's exactly 74. So I'm going to set up an alert, create alert, where if it is at or below 74, notify with a sound mobile. So I don't have my speakers on my computer, but if I had my speakers on, I'll hear a sound to alert me, but I will also get this text message. I always do the text message because I'm always going to have my phone next to me. So I'm going to create that. Boom. There we go. If it hits below 74, at or below 74, I will close this trade. But again, I like where it's at right now. We'll see what continues to happen with it. So it looks like, of course, right now we opened it and now it wants to pull back a little bit, but you know, I'm not worried about that. If it that's what it wants to do, then so be it. This is the 5-minute chart. I could very easily trace to this 20 period moving average on this 5-minute chart and continue to go up. So again, I'm not worried about what happens the moment I open up the trade. We have our alert set. If it drops to that alert, then we'll get an alert. We'll close the trade. But in the meantime, let's just see what happens. I will also probably close the trade if it gets to a point where, you know, it's really starting to show a lot of weakness trying to go any higher.